Everyone, just give me a second. Okay, I trust that you are seeing the PowerPoint screen in the presentation.
Yes.
Okay, great. Thank you for that confirmation, Vanessa. I am actually struggling to see what exactly I'm sharing, but I trust that it's all working out. Um, my name is, well, first of all, thank you all for joining. In terms of the discussion points today, I'll just take a brief moment to introduce myself. Then we'll talk a little bit about PPP loans, just make sure everybody understands what they are. And then we'll spend the majority of the time talking about PPP loan forgiveness, because I believe that that is kind of where we are at the moment with respect to this program. My name is Ladell Robbins. I've been the CFO and the Chief Investment Officer of Invest Newark since August of 2019. I come to the organization with over 20 years of financial services experience in several countries, several continents, here in the US, in London, and then also in West Africa, Lagos, Nigeria. I have a BA in economics and my master's in business administration. But most importantly, I'm very passionate about trying to improve society through business, and happy to be working with my colleagues and all of you to build better businesses in the city of Newark and also create an enabling environment for business. So for those that are not familiar, the term PPP basically stands for the Paycheck Protection Program, which is a loan program that was designed by the federal government as part of the CARES Act to essentially provide capital for businesses to keep their workers on payroll. So in summary, as COVID-19 unfolded, the federal government was very concerned about business closures resulting in a lot of layoffs, wanted to find a way to keep money flowing into the economy. And one of the major initiatives out of the CARES Act was the PPP loan program. The beauty of this program and why it was so attractive is that the Small Business Administration, who basically acts as the administrator for the program, will essentially forgive loans if the employee retention criteria have been met and the funds were used for eligible purposes. And we'll come to that shortly. But the other major attractive feature was that almost every business, every self-employed business, every nonprofit, sorry, I think I need to change my presentation setup. Is it showing the wrong screen?
We're just seeing the where we see the preview. It's not showing the full slideshow. So just so maybe people are having difficulty reading, if you could go into full slideshow, that would be helpful.
Okay, is this full slideshow?
Yes, thank you.
Great. All right, got it right now. All right, sorry about that, everyone. Thank you, Vanessa and Hilda. So, as I was saying, one of the attractive things about this program is almost every entity was eligible. Every business, every self-employed business, nonprofit, faith institution. The point was that if you employ someone, including yourself, you are highly likely to be eligible. And the total program size was a whopping $660 billion. Now, in terms of the basic terms, actually kind of the way the math worked was you would look at your 2019 payroll and you would basically come up with your weekly payroll and how much you paid in a month. So basically 4 weeks of payroll. You would multiply that by 2.5, and that was the amount of funding you were eligible. Obviously, if you're a self-employed person, you would calculate this based on your earnings as a self-employed individual based on what you filed in your Schedule C. Now, the funds from the PPP loan, if you are a successful applicant, could essentially be used for four purposes. One was payroll, which included salary, wages, vacation pay, family medical benefits, and health benefits. The second was mortgage interest, as long as the mortgage was entered into before the 15th of February. Rent, as long as the rent was entered into before the 15th of February of this year. And the same for utilities. Okay. And all of those expenses basically were monies that you could spend, expenses that you could incur with the PPP funds, and they would be eligible for forgiveness. Now, at the time, what was envisioned was that you had to use the funds within an 8-week period, and also you had to spend 75% of the funds on payroll. In June of this year, there was a fix that was made to the PPP program, and now you have 24 weeks to use the funds, and you only have to spend 60% of the funds on payroll. So I think this was a very useful fix to kind of give businesses more time to use the money, as obviously the situation around COVID-19 has been dynamic, and also more flexibility to use more of the funds on expenses because there were businesses that had let people go and then they were trying to bring them back as part of the reopening, or use more people as part of the reopening. So the time frame was helpful as well. Now, what I've just shared should not have been new information for many people that have been following what we've been doing at Invest Newark, because on our side, we have been actively pushing the PPP program to the business community here in the city of Newark. And over on the right, you'll see some of the organizations that participated in our first webinar or subsequent to our first webinar decided that they wanted to partner with us and they wanted to help facilitate capital going to Newark businesses. And we're thankful for, those partners that helped, to step up to process applications for businesses in Newark. As a result of all of this, we're aware of at least $775,000 that has kind of gone through channels promoted by Invest Newark, and there may be, even much more. We just haven't been able to capture the data of capital that has gone to businesses here in the city of Newark. The last thing I'll say is that there still is PPP funding available. Even though many banks have decided that they are no longer taking PPP application, the SBA has opened the program all the way up until the 8th of August, subject to funding being available. So if you're hearing this for the first time and you think that this is something that would be useful to you, you can contact Invest Newark or you can contact one of the partner organizations mentioned on this website and look at how you may still be able to apply. So now I want to turn to where many people probably are, which is you have applied for a PPP loan and you now are spending the funds and thinking towards the future and applying for loan forgiveness. Because obviously the main objective of taking this program loan was to be able to have the loan forgiven and basically have kind of the equivalent of a very large grant in terms of capital. But now this is where kind of the devil is in the details, and I want to cover 5 key concepts that you should keep in mind. If you took out a PPP loan, up until it is forgiven or a portion of it is forgiven, you indeed have a loan. And that loan is accruing interest at a rate of 1% per annum. And that accrual date starts from the date that you actually receive the funds. So not from when your application was accepted, but from when you actually received the fund. The interest is something that can also be forgiven, but as of now, you technically have a loan. The second key point is a concept that is known as the covered period. From the date that you receive the funding for the next 24 weeks up until the 31st of December, you are able to use the PPP funds in accordance with the program. The important thing to note here again is you count from the day the money actually landed in your account for 24 weeks. However, if the 31st of December comes before the 24 weeks, the 31st of December is the end of your covered period. You then have 10 months from the end of the covered period to apply for loan forgiveness. So basically, you have, after the covered period is ended, another 10 months to actually apply for loan forgiven. Now, whatever is not forgiven, because it is a loan, it has to be paid back in either 2 years or 5 years, depending on when you applied for PPP funding. And if I'm not mistaken, the magic date is June 4th, because if you applied before Congress made the fix, you have a 2-year loan, but if you applied after that date, you have a 5-year loan. Now, I expect that Congress is going to take a look at this and harmonize, those dates. But as of now, that is the situation. And that actually brings me to the last point, which is that the guidelines have changed and they may actually change again. So don't rush into loan forgiveness, because the program may change in such a way that it could become more favorable as it did recently. So the important thing is to just keep track of your uses of funds and to monitor the situation. And of course, whatever we learn at Invest Newark, we will pass along. Now, as it stands right now, here's how forgiveness works. Your loan will be forgiven if the loan proceeds were used to cover payroll costs, and that amount was targeted at 60% or at least 60%. And then the eligible other costs, the mortgage, interest, rent, and utility over a 24-week period. The second major test is about employee and compensation levels being consistent with what you applied for when you asked for the loan. And the employee and compensation level, this is what I call the tricky part. And we're going to cover this, but this is the kind of thing where you might want to get some dedicated advice in terms of trying to figure out how to do this calculation. So how much will actually be forgiven? So that is going to depend on your answer to those two tests, or how you measure up against those two tests. So just to recap, 60% of the loan at least must be used for payroll costs, using the same definition of payroll costs at the time you applied. And then no more than 40% of the loan can be used on the other expenses, with those expenses having been legally put in place by the 15th of February of this year. Whatever portion of the loan those rules do not hold true to is going to result in that portion of the loan not being forgiven, and then you having an amount that you have to pay back in 2 to 5 years. Another note on the amounts that are being forgiven is that from a tax perspective, it's not going to be considered a cancellation of debt, which basically means that you're not going to have to treat it as income, because it's almost going to be like the amount that was forgiven never really happened. So that part shouldn't impact your taxes. Similarly, you're not going to be able to claim a tax deduction for any expenses that you use PPP funds to pay for, because that would be like you're double dipping. So very important to understand the tax consequences of this as you go to fill out your taxes, to ensure that you're not double dipping. So measuring payroll, and I want to kind of do a dive into what I said might be the tricky part of all of this. There are two main tests. The first test is, did you maintain the number of employees on your payroll that you said existed at the time you applied? Secondly, for those people that you maintained, did you ensure that at least 75% of their salary was maintained? So in other words, if somebody was earning $100 before, during this period, you didn't reduce their pay to $60. You kept it at least $75. So those are the two major tests. And there's a very, in my opinion, if you are very good at math, it will make sense. But it's kind of a tricky calculation that the forgiveness application requires you to complete, which is why I say you might want help in doing that or watch tutorials online, because you have to go through it very systematically to determine the amount of the loan that you are going to request forgiveness for. So again, it might be prudent to get help on this part of the application. And I'm going to take you through a couple of examples to show why. So let's start with payroll deduction. And there's a lot of text here, but we'll go through the situation. I'll just read it out. So let's say you have 3 employees and they made $3,000 per month, which meant that at the time you applied for your PPP loan, you applied for $22,500, which was $3,000 per person times 3 times 2.5. Then, as a result of COVID-19, you had to lay off staff members, but you hired all 3 of the employees back when you got the PPP loan, keeping in line with the spirit of the program, but you only pay them $2,000 a month. So they earn less than they did before the PPP loan, or what you put in when you did the PPP application. Now, because the program has been extended over the 24 weeks, you actually spend $36,000 on payroll for your staff, which is the amount of paying each person the $2,000, a month. And you want to claim the full $22,500 that you got from the loan as part of your forgiveness. Here's where the trickiness comes in, which is there's a problem. Because when it comes to calculating the forgivable amount, you have to look at each employee's individual compensation. And therefore, the 75% minimum salary was $2,250. You're paying a person $2,000, so that's $250 less each month that a person is earning. Therefore, the application, and this is the part of the math that is a little, tricky, is you basically have to scale up the difference in the you have to scale up the shortfall to basically determine how much these folks would have been paid if you had paid them at the 75% level. And that essentially works out to $1,500, dollars per person. So therefore, when you do that for each employee, you would have found that only $18,000 of the loan may be forgiven because of the difference between what you're paying people and 75% of what they should have been paid based on the amount that you applied for at the time of the loan. And your loan is not completely forgiven, even though you actually spent more than the amount of your loan on employees. Another example that we're going to go through, and again, like I said, I keep using the expression, it might be tricky. So now let's take a look at a situation where you reduce headcounts. So let's say again, you had 3 full-time employees They were all earning $3,000 per month, and your PPP loan amount was the $22,500 as calculated before. You had to lay people off again in February because of COVID-19, but you decided now to only hire 2 of the people back, and so your workforce is 2/3 of your original headcount. Over the 24 weeks, you spend $36,000 on employee costs which is more than the PPP loan, because you basically employ these individuals over a 24-week period of time. You claim the full $22,500 because of the amount that you spent on salaries. Now, there's some relief depending on if you attempted to rehire someone, but they decided that they didn't want to rejoin. So there are a couple of safety nets, which we're going to exclude those as being relevant and just say that you just made the decision, you only needed 2 people, so that's all you decided to hire back. But there are some relief mechanisms depending on why your workforce, is lower, that may be relevant to you. But basically, your forgivable amount is essentially 2/3 of the amount that you applied for, because you only have 2/3 of your staff. So in this case, only $15,075 is going to be forgiven, and the difference relative to $22,500 is going to be a loan. So now I want to go to, how do you actually apply for forgiveness? You probably are already receiving correspondence from your bank, either letting you know we are now accepting forgiveness applications, or we're not yet accepting forgiveness applications. But your bank should write to you and let you know the steps to apply for loan forgiveness. If you don't hear from your bank, you should certainly write them, especially as you get towards the end of your cover period, to get the rules for applying for loan forgiveness. It is very likely that you're going to have a choice of 2 forms. Despite what the bank may put together, it's all going to relate to the form that is ultimately required by the SBA, which is called the Form 3508, or they have an easy version of that form if you are self-employed. You're also going to want to have documentation verifying the information that you put into the form. So you're going to have your payroll reports, including your IRS payroll tax filings, or your state income tax filings, or any other evidence that basically is going to show how you paid payroll. You're also going to have documentation related to the other expenses for your mortgage, your lease, or utilities. You're going to be asked to certify that the documentation is true and that the amount that is being considered for forgiveness was indeed used in accordance with the program. And you're required to keep all of that information for a period of 6 years. I should have put that in the slides, but the information that you use to apply for forgiveness, you should hold on to it for at least a 6-year period according to the guidance. Once you apply, the lender has 60 days from a completed application to basically respond to you and to submit a decision to the SBA. So your lender is going to be the one, just like they reviewed your application for getting the loan, they're going to be the one reviewing the loan forgiveness application. So it's important to maintain your files right now and keep your documents for when you apply for forgiveness. So I'd like to come back to just recapping the main concepts that we covered on loan forgiveness, because at this point, it's important that you have these details in mind so that you are prepared for what's likely to occur with respect to loan forgiveness. Point number 1 is that as of today, you have a loan, and that loan has a cost of 1% per annum. But the interest that is generated is one of the things that can also be forgiven alongside of the principal. Point two, you have 24 weeks from the date you receive the funds up until the 31st of December. So whichever comes earlier, your 24-week period from when you receive the funds or the 31st of December to basically use the money in accordance with the program. Once the cover period is done, you have 10 months to actually apply for loan forgiveness. Whatever is not forgiven, depending on when you actually were awarded the loan, will indeed become a cost that you have to pay back. And that cost will also have a 1% cost per annum, depending on how long it takes for you to pay it back. Last point is that the guidelines have already changed. They may change again. So don't feel pressure to rush towards forgiveness, but just keep track of your documentation and the timetable that you're on from when you receive the funds so that you can monitor the situation. Because if the situation continues to become more favorable, which I personally believe it will, it's going to work in your advantage, just like it has recently worked in your advantage that you now have 24 weeks instead of 8 weeks to use the funds. As I mentioned in the last presentation, switching gears, I just like the opportunity to encourage everyone, if you are buying office products or janitorial products, to basically consider purchasing from an innovative employee-owned business that was more or less founded by the city of Newark. The Newark Paper Company is in business. It has some PPE equipment and products. It has janitorial products. It has office supply products. And thanks to some new supplier relationships, almost anything that you need for your office, Newark Paper Company will be able to offer it to you. There are certain products that we're offering very competitive prices on, at the moment. So take down those details and support, a Newark business with some of your day-to-day office office needs. The last thing is invest Newark ourselves. Again, we'd like to remind everyone that information for COVID-19 impacted businesses is available on our website. You can go to our website to get the previous PPP webinar that we did. There'll be a recording of this webinar on our website. There are other resources, including the reopening permit application and guidelines for the city of Newark. We also have a business directory, which I think is very important for you to add your business and locate your business. The reason for this is our website is so comprehensive that many businesses are actually going to Invest Newark's website to look at other businesses that they might be able to procure goods and services from. Lastly, there's a procurement portal on the website where you can find out about RFP and contract opportunities, for your business. So we encourage you to visit investnewark.org, load your business there on the business directory, and also check out the procurement portal. And if you have opportunities, post those on the procurement portal as well, so that other Newark businesses might be able to participate in what you have to offer, and we can all work together to facilitate a strong economic recovery for the city of Newark. With that, I'd like to thank you. And from here, we will turn it over to questions that you may have. Thank you.
Thank you, Ladell. Please unmute yourself if you have any questions or would like to go back to a previous slide. You can also put your questions in the chat room. I think wait another minute if anyone has any questions.
Okay, that's good. I'm feeling like we did a good job of covering kind of the highlights, so that folks can uh, be prepared and go on with the rest of their Friday and get ready for the weekend. So please, if there are any questions, let us know.
Yes, please send your questions to capitalconsulting@investnewark.org. I put that email address as well in the chat box, so please make sure to look at that. As Ladell mentioned, we are going to put the recording of the presentation on our YouTube channel. With that, I'd like to, if there are no questions, thank you, Ladell, very much for your expertise and sharing all of this information about the PPP. You know, funding is and criteria, the process. It's still a moving target, so I think we appreciate you providing that information, and we will Invest Newark will make sure to keep our business community updated as well in the future.
Great. Thank you all. We appreciate you dialing in and have a very good weekend.
Thank you.